short squeeze for you day trading. It's not financial advice, but it'll give you a very good understanding on how to spot a clear short squeeze ready to happen as such. So we're going to look at two stocks, VTEX, and the other one is ARWT, I believe. We'll have a look at that in a moment. Now, one of them is ready. The other one has already happened. Okay, so one is ready, one's already happened. We're looking at VTEX at this moment in time. We've identified a high resistance node area above. We're on the monthly charts. We're going to go down to a weekly chart, and we can see, if we go to the weeklies, that on several occasions the price has tested this high volume node. Okay, above this is pretty much thin air, no real trading activity above up until around 450, 456. Okay, now at 410 there's been between 410 and 3, I think it's 3, is it 399? Yeah, 410 and 399. A huge cluster of trading has occurred, high volume and very likely high resistance, many sellers. Okay, on several occasions the shares have exchanged hands over the past coming weeks. That tells me, right, that the resistance in this area is near enough diminished, i.e., although it still shows a high volume node, there is not many standing there anymore. Okay, which means if price does break and hold above 410 on several occasions, whereas yesterday we had a very heavy sell off, okay, and retracement, then it is very more likely that momentum is still there. Although if we go down to a daily, it looks like the move is over, okay, and we've closed below the previous day's lower low. Okay, it looks to me like the move is over. However, on several occasions this zone has exchanged hands in shares. So think of it this way: you're standing on a busy New York street. On one side of the road there's traders, a huge crowd of traders. Okay, they hold a lot of shares, and then there's us on the other side. Okay, we cross this road together, we exchange shares. Okay, we're now standing on the opposite side of the road where the high volume area was at one point. Okay, and where there was potentially millions of shares, now there's only a select few 10,000 standing on this side of the road. So we allow the market to take over, and we short the market indirectly by basically just walking back across the road to the other side. Okay, which we call the level 2, which at this moment in time is around 381. We're now sitting on this side of the road again, and we look across and we see that once there was millions of traders on one side willing to sell shares to you, now there's only a select few. So we do the same scenario. We walk across the road, we sell a few more shares, we exchange shares. Okay, we're now again standing on the level 1 side, the ceiling side, the high resistance side, whatever you want to call it. Okay, now there's literally nobody there. Okay, and in the distance you can see another cluster of elite traders waiting to sell you shares, but that is roughly around 450, 455. You cross back across this road, okay, with the retracement. Okay, but this time the retracement levels move slightly higher. So at the moment we've still got it as 381 because we would have built a position a lot lower than level 2. But as a day trader, you are continuously active. Okay, so you've crossed back across the road, but this time the level of support you're standing with is now 399. This time, when you cross that road, okay, there's going to be more traders that have turned up now, and these traders are short sellers. These are the sharks. These are the ones that are waiting to sell you shares borrowed from the market and to buy cover them again. Okay, buy cover will be 420, 430. Okay, that will be their stop loss, shall we say. Okay, so the buy to cover. Now, as you travel across this area, these traders with smart arse smiles on their faces, right, begin offloading their shares. However, the buyers don't stop coming. They're still crossing the road. There's more crossing the road. There's more crossing the road. Even more turn up willing to buy these shorts. And before you know it, the shorts have to buy back their position at 420 and 430. And then it only takes one market order to take out all of these shares, okay? Which means you then get a short squeeze. And that is exactly what a short squeeze is. And the best time for a short squeeze to happen is not on a high percentage short stock with long days short to ratio. The easiest way to catch them is low percentage short of float, low percentage short of shares, and low institutional ownership. Okay, because if you've been following me for a while, you'll notice that I've mentioned that a few times. There is some absolutely shocking fund managers and portfolio managers out there, and they will literally sell all of their shares just to break even when they are wrong, which means at this moment in time they could have been wrong many months by, and they've held on to these shares up to this point, and they may have these shares in millions, and they will begin offloading their shares to you, okay, just to break even. Okay, so if you've got high institutional ownership on a stock which is near a short squeeze level, you don't want to be trading that stock, okay, because it could take weeks or even months to get rid of those shares sitting at that level from that absolute garbage fund manager. So look for low float shares, low float percentage shares, I should say, and also look for low float as well. The lower the float, the more aggressive the price will move in the direction you want it to go. You know, floats under 100 million can move fast. Under 50 million will be rapid. Under 200 million will move nicely. Okay, so less risk, 200 million shares up to 150 million shares can move quite nicely. Aggressive, high risk, under 100 million shares. So you've got to make that decision for yourself. So let's quickly head over to ARTW. It was Artway. Excuse me. So same scenario again, right? We're near a level, okay, a high resistance ceiling level, shall we say, a level 1. Okay, at this moment in time, we've got it drawn differently on the chart because we're targeting different areas. Okay, but you can clearly see on the right hand side, it's roughly between 225 and 247. Okay, same scenario, stand on one side of the road with yourself and your other traders, and the other side of the road, elite, numerous cluster of millions of shares waiting to be sold off to you. Okay, we need to break this level several times. Okay, we've tested it 4 weeks on the run. However, on the 4th week it broke through. Okay, sorry, forgive me, my apologies. There we go, that's better. Okay, so we tested it 1, 2, 3, 4. 4 weeks on the run from the 9th of March up to the 6th of April. We tested that high resistance area. Okay, on the final week, which was this week coming, this week we're in now, forgive me, Monday the 13th, we broke through that level because over the previous 4 weeks we consistently exchanged shares, okay, in this area, to which point there was basically probably one lonely trader this week sitting at that level waiting to short, and he got all his mates to turn up at that level to short the market, only to get his arse tanned and have to buy back cover, which skyrocketed the stock. Okay, so let's go to the daily. Right, excuse me. Thursday the 9th of April, we tested this area. On the Friday, we tested the area again. On the Monday, this week, we again tested this area. However, this time we had quite a lot of selling off, and the price retraced. Didn't close exactly below the lower low, okay, but it did retrace. Very similar to what you've seen at VTEX. The only thing is with VTEX is the candle did close below the lower low. Okay, so you've got to wait for today's price action to occur, because there may be one more candle which continues lower but then finishes higher than yesterday's lower low and the previous day's lower low, which shows bullish intent. So you've got to wait before starting to gain position on VTEX. However, ARTW, perfect example. Monday retraced quite aggressively all the way back down to the lower low. Didn't close below the lower low, but did consolidate with what's called a doji candle. We just call it a hesitation candle. Okay, there's hesitation in the market. However, the following day we opened a lot higher. That is aggressive. And as we said, that lonely trader standing on his own, who brought along all his mates to short the market, got his arse tanned and had to buy back his position, which means the next seller, okay, the next heavy volume node seller may not have been up until $2.50, which is where we've got the level one. Okay, and it's at this point that those traders that turned up to short the market had to buy back cover, which meant they had to buy back all the way up to $2.50. Okay, which created that small squeeze at the beginning of the day, and then it absolutely continued on upwards to the next level, which ironically was 265. No, it went even higher, but it closed yesterday at the exact point at which we drew our level one at 265. We drew that quite a number of months ago. Okay, so that's a few days prior. So you can see that it's already been within that area. Okay, but that's not the point. The short squeeze is where the level's being clearly identified and has been tested and exchanged shares several times. And it's at that moment, when there's that one lonely trader sitting there who's brought along all his friends to short the market, that we're wrong. That's when the short squeeze happens. And what makes a short squeeze even more predictable is when you're looking at quality stocks. You're looking at stocks with positive net cash cover of debt. You're looking at stocks with free cash flow positive, at least 5%, even better 10% of its market cap. Okay, these stocks gain interest from institutions like ourselves. These stocks gain interest from smart money algorithm systems. Okay, they're designed to spot undervalued high quality stocks. Okay, and that is how you make it even more predictable to spot a short squeeze. If it's been of help to you guys, then please give it a repost, share it out to the market, let other people know. Comment below, Strado, if you like our content. Okay, it helps us know that what we're doing is helping everybody in the industry.